What's up, guys? This is Tyler with Division One Trading. Again, this is the free Forex YouTube course. Go ahead and read the disclaimer if you haven't already. Today, we're going to be going over support and resistance. So there it is. So support and resistance is a very broad term, right? Considering support or resistance can seemingly come from any level. So today we'll talk about areas where we expect support and resistance to be an area of resistance. So we've just kind of added some more direct levels, and I'll show you how I use them. So the same way that we view the Inception Theory is the same way we view support and resistance. There will always be some form of daily market structure as well as 4-hour or 1 hour, right? Depending on your trading style, right? And if you haven't seen the other videos or you're unfamiliar with the Inception Theory, right? It's just like the movie. All you really have is just one piece, right? Inside of another piece, inside of another piece. I'm not sure. I'm sure there's some mathematical term for it, right? But that's basically what I'm trying to describe. Is like the old Mr. Potato Heads too, I guess you could say. They had the old little eggs and deals, whatever it was. So we're going to recap that, right? And then so recap the candles. So we can anticipate a bullish or bearish candle based on the wicks, right? Because the body we just have here open, close, right? That would be just a bullish candle. But when we have just the wick, right? So if we see open low, then we can expect it to be a bullish candle. If we see open high, we can expect it to be a bearish candle, right? And that's just generally speaking. Obviously not always, but just generally speaking, that's how the candles are going to work, right? And then that's what it forms, right? So when we're talking about market structure, we're really talking about any range, right? So it could be a daily range, it could be a 4-hour range. It just has to be a specific high and a specific low, right? The one that I go for is I go for the peak high, the highest high in the recent area, and then the peak low. And we'll go over what some of those look like. Just let me cover the concept first. So I'll use really the highest high and then the lowest low, right? That's the way I think of it. And then I'm looking at 50% of that area. So once I have that, I'm looking at really the upper zone, right? So when market structure is created, right, we'll have the highest high, and then we'll have to have what? At some point, a lower high, and then a lower high, right? So we're looking for price to build a shelf, or really just an area where it pauses. So after that highest high, that next high is what I call the barrier zone, right? Because if price goes back to this highest high, it has to get through this barrier zone first, and vice versa on the downside, right? When we make that lowest low, the higher low that comes after that, right? And here would be the lower high. The higher low that comes after that is the barrier zone, right? And that's why it's called a barrier. It's literally just a barrier to that last high. So this is pretty much what I was trying to explain, right? If we have some level of market structure and there's the higher high or the highest high, peak high, once it breaks down, then whatever level it comes back to, that's the barrier zone that we leave there. And we'll talk about why, right? And then so here we just talk about these are fib ranges. We'll talk about fibs in a different video. So, for example, we're looking at a trade. This is the peak high, right? And so how to mark a zone? When we see the peak high, right, this is the highest point on the chart right now. This is the highest point. So what we do is we put a line on the highest body there, and then the highest wick there. And like I said, we'll go over in a second, but that's how you mark that zone. So then the lowest part of the day, same thing. Right, we mark the body and then the lowest wick. So then now we're looking for our barrier zone. So on the upside, right, we wouldn't want to mark here because that's pretty much the same point, right? This one's just too close, right? This is that next high right after this one, but it's pretty much right on top of it, right? So then when we trade up here and we trade down, right, we're using this area here now as that barrier zone. So if we get through that high and start trading, we're going to expect it to trade to that zone. So here's a range, right? So we're looking at this peak high and this peak low. We have a range low here, and right, we mark a zone from the body to the wick. Now we're looking for the barrier zone. So right here it makes that lowest low, and then this one here we mark from right there, the body to the wick. So once we mark that, now we wait for price to come back to it, and if it trades through it, we take it to the zone. If it rejects it, we trade away. So if you've watched the trend line video, you'll understand how to take this trade. And also after this, make sure you watch the engulfing video. That one should be coming up soon. So it trades down into that barrier zone there. So the barrier zone is defended with this large push. And then as it's pulling back in a retracement, that's when we can buy it and go long, expecting this to be protected. Okay, so let's go into the charts real quick. Okay, so looking at price, right? If we're just talking about this day here, we could be using this as the peak low, start here using this as the peak low, and this is the peak high, right? Looking at this whole area here. So then we would be marking this as the peak high here. And then this would be the barrier zone. You see how it reaches all the way up? So this one, you see how the wick is right there? So the barrier zone would pretty much just be on top of it. So we can't use that one. So we would look for the market structure after that one, right? We just talked about that. So right here, now we mark from the body to the wick. So right here, we have our barrier zone, and then here we have our peak high. And then down here, we have our lowest low. And then we have our barrier zone here. So what other level do we need? 50%. So we have that area there. Okay, so now you can see this day opens, it trades down, creates a zone, trades up, right? And when it's trading up, trading to these zones, I'm not sure what's over here to the left, but when it's trading to these zones, once it breaks this level, we have to understand that it's most likely going to reach here. And it does, it pulls back. Then we even get a retracement to there, and it gives another trade. Right, so we can use, as you can see, the barrier zone on both sides. It works just like support and resistance. Right, so we trade through that level, and as you can see, you can still use this. Think of it like a head and shoulders. You don't adjust it though. That's one thing. Don't, if you do reuse it, don't adjust it. So, right, we could keep that level in mind. I'm just going to go ahead and take this barrier zone off and mark the new peak high. So we'll be marking that. We could use this and that would help us, and that's all good, but I'm just going to restart it. Right, so we have a new barrier right here. That'd be a barrier zone. And then here would be the peak low. And then this barrier zone would be here. So as you can see, we're waiting. Can't trade to that one. The day is trading down, so we're kind of expecting these to get hit. Boom, trades up, tags that zone. So now that our barrier zone has been tagged, we could reasonably expect it to want to go up there. It doesn't, right? It fails and goes back here. So now that we've broken this one, right, we expect it lower. It does, right? It hits lower, tags that low right there. See that? And then goes lower. Cool, guys. That's it. Let's go through one more. Okay, so if this is our zone here, right, let's use that peak high. And let's just use this whole day. Let's say this is all we had. It was this information here. We'll be using that as peak high. We're using this as our peak low. This would be our barrier here. When we trade to that, we would expect that to get hit. Yep, so it does hit it. And we really don't have a barrier here. So really the only barrier that we could use would be this here. After that highest high, see there's no market structure. So once it trades through here, we would expect it to reach up for that. Reaches again. Can't quite make it. And then see, once it closes back below here, that lets us know, hey, we're probably, like I told you, right? It's like support and resistance. So once it gets back under it, we're expecting it.